Hey everyone, I still remember the COVID period when textile sector stocks generated exponential returns. However, it's been more than 2 years since it has underperformed. If you recall, I did a detailed analysis during the beginning of this year and discussed why I think that the textile sector in India is on the verge of the next set of rally. In fact, I've been observing that many FIs, DIs and HNIs are consistently investing in the textile sector. So in this video, we'll first try to understand the reason behind why textile sector can be the next wealth creator. Then we'll look at the entire value chain of textile segment and top player in the segment. And then we'll also look at the textile stocks where top institutions and ace investors are bullish. But before we begin, a disclaimer that this video is only for educational purpose. The idea is to share my knowledge. Please don't blindly invest based on this video. Do your research to build conviction before investing. Alright, let's get started. To begin with, let us take a few case studies and understand the rise in textile stocks during COVID and then correction and consolidation. For instance, Gokaldas export zoomed from lows of 30 rupee in March 20 all the way to 1000 rupee, generating more than 30 times return. A brilliant turnaround story. However, it's been nearly a year since the stock price is stagnant. KPR Mill zoomed from lows of 65 all the way to 750, generating more than 10 times return. However, it's been more than 2 years since the returns are not great. Trident zoomed from lows of 3 rupee all the way to 60 plus, but it's been more than 2 years since the share price has corrected and consolidated. Likewise, garment companies like Rupa zoomed from 120 rupee all the way to 500, and since then it has corrected and consolidated in the range of 270. Lux Industries zoomed more than 5 times but witnessed a brutal correction. Microcap company like Sport King zoomed more than 40 times and then corrected significantly. However, there are very good signs of recovery in share price with very high volume. The question is, why textile sector underperformed for the last more than 2 years and why is it looking promising now? So there are 3 key reasons for underperformance. First is low demand. During COVID, the interest rate across the world were very low and that eventually resulted in high inflation. To combat the inflation, central bank around the world increased interest rate. As a result, consumption started slowing down. Due to that, there was a sharp fall in demand for textile sector as consumers curtailed their spending on fashion and discretionary products. So fall in demand for fashion product resulted in sharp decline in order book for textile sector, especially during FY23. That fall in order book badly impacted the top line of textile companies. However, the inflation problem has started to ease out and the demand has again started to pick up. Then second reason was high inventory issue. Due to fall in demand, the inventory with textile companies got piled up. And when you have inventory piled up, you have to clear it at low cost. So that resulted in inventory loss and impacted the EBITDA of textile companies. But now, retailers across the world are sitting on very low inventory. That has created a good case for an increase in the order book. And third reason is huge surge in cotton price. During COVID, cotton prices fell down significantly that boosted the profit of textile companies. But over the next 2 years, cotton prices zoomed exponentially that resulted in sharp decline in EBITDA margin. But cotton prices have already seen a significant drop in the prices. So basically, textile sector got badly impacted due to fall in revenue and margin contraction that resulted in sharp decline in profits. And now that there is increase in demand and retailers are sitting on very low inventory, so that would result in increase in order book and eventually the revenues. On top of that, fall in cotton prices would increase the EBITDA of textile companies. And that should result in sharp increase in net profits. Apart from these 3 factors, there are 2 more factors that are key growth driver for textile sector in India. So fourth factor is China plus 1. Historically, China has dominated the global textile industry, but there has been consistent conflict and trade war between US and China, and that is one key reason. Especially US companies are reducing dependency on China, and India has emerged as one of the biggest beneficiary of this trend. And fifth factor is government support. Indian government has set a textile export target to $100 billion versus FY23 export of $35 billion. There's already a PLI scheme for technical textile segment and government now intend to extend that PLI to t-shirt, innerwear, although it's not yet finalized. So all these factors would play a key role in upcycle in Indian textile sector. Now let us look at the value chain of textile and key players in the value chain. So this is the value chain of entire textile sector that include your spinners, garment manufacturers, made-ups and technical textile. Spinners basically manufacture the yarn that is further used by garment manufacturer. Here please note that spinners operate on lower margin and they are more volatile to raw material changes. For example, if let's say raw material like cotton, the prices goes down, then spinners make a lot of profit. Likewise, if the prices goes up for raw material, they make lower profit. And that's where if there's an upcycle in textile industry, then spinners can make a lot of profit and that would get reflected in the share price. What are some of the companies? It include your Vardhaman Textile, Nahar Spinning, Sport King India, Lakshmi Mills, Sutlas Textile, Jindal Textile, Ambika Cotton, Nitin Spinners. So those who can time this upcycle in textile industry, they can make a good money in spinner category. Having said this, you also need to time the exit, because when the down cycle start, these companies, their profit can tank and their share price would also fall. But yeah, this is a good category to probably consider during the upcycle. The next segment is garment manufacturer. As the name suggests, they manufacture the garment across your categories like your women, men and kids. Here again, you can divide it into two segments. One is the category that manufacture the apparels like your jackets, tops, bottom and so on and so forth. Companies like KPR Mill, SP Apparel, Gokuldas Export, Arvind Fashion, Pearl Global, Kitex. These are some of the companies. Then second category is the companies that manufacture the innerwears. Okay, that include your Rupa, Lux, Dollars. And within innerwear, they also manufacture the winter wear. Right? And again, you can broadly divide this into geography as well. For example, companies like Gokuldas Export mainly derive its business from US market. Right? So you can understand, some of the companies may derive market from Indian market. For example, Arvind has got major business, nearly 50% business coming from Indian market. And some companies have business coming from across the world like US, Europe and so on and so forth. Also here, please note that some of the companies are also backward integrated like KPR Mill that also manufacture the yarn. Right? So this is the value chain where you have got garment manufacturer. Then third category is made up. Made up is nothing but the textile that is other than apparel. So it mainly include your home textile like your pillow cover, bed sheets, then blanket, then throws, bathrobes and all of these things. Top companies include your Indocount, Wellspun Living, Phase 3, Trident Group and Himmat Singh Kasite. And fourth category is technical textile. Now textile can also be divided into two categories. One is your natural fiber and another is man-made fiber. So technical textile is nothing but the man-made fiber. Natural fiber example is your cotton, wool, silk, and your man-made or technical textile example is your polyester, viscose. So these companies manufacture the technical textile. What are some of the companies? It include your Ganesha Ecosphere, Indorama, then Filatex, Sangam India and Garware Technical Textile. What are the applications? There are a lot of applications like your sports nets, fishing nets, agriculture nets, and they also find usage in your garment sector. For example, the jackets, outerwear category is also made up of technical textile. Likewise, they find usage in your home textile as well. Here, please note that this is a very interesting company within technical textile, Ganesha Ecosphere, where it manufactured the technical textile out of the plastic waste. Right, and you also have Garware Textile as also a leading company. So this is basically the value chain of textile sector that include your yarn manufacturer, then garment manufacturer, then made-ups that include your home textile, and finally you have got the technical textile. So first company in the list is Gokuldas Export. This is one of the most preferred company by top FIs and DIs. I've already done a detailed analysis on Gokuldas turnaround story under the leadership of Mr. Siva Ganapati. Now, if you look at company shareholding pattern, in last 12 quarters, FI stake in the company has consistently increased from 4.6% all the way to 26.55%. In fact, in latest June quarter, the stake has increased by more than 5%. Who are the FIs? Where it includes top names like Goldman Sachs that has consistently increased stake in the company in the last few quarters. There are two more FIs with recent purchase that include Custody Bank of Japan and Fidelity India Focused Fund. DI's stake in the company has also consistently increased from 10% all the way to 31.8%. And it again includes all top mutual funds of India. Overall, FI and DI collectively hold around 58% stake in the company. Although promoter holding in the company is consistently falling, but we have already discussed the reason in the past. It's because Gokuldas promoter is a PE firm that entered at very low levels and now booking profit. But the key point is that the stake sale is absorbed by a strong hand of FI and DI. Weak hands of public have consistently reduced in the last 12 quarters. Gokuldas is mainly engaged in garment manufacturing with focus on US market. If you look at company's financials, after struggling for many years, company got turned around with new leadership and its top line has grown at a very good rate. Company's margins have consistently improved that resulted in huge growth in operating profit, and that got reflected in the bottom line as well. Although FY24 was a bit softer with slowdown in growth due to multiple challenges in textile sector, but looks like FY25 should be much better. Company has consistently generated cash in the past, but FY24 is showing negative cash due to very high inventory because of slowdown. Going forward, this should also become positive. Another very promising company in this segment is KPR Mill. It has been a consistent wealth creator where its share price has zoomed from 20-25 rupee all the way to 850 in the last 10 years. Company's financials have consistently grown over the last 10 years. Company has consistently generated very high cash from operations. Its debt to equity is also just around 0.27 and both ROE and ROC are around 20%, and that too in this difficult environment. Company has a very strong promoter background with 73.7% holding, and FI and DII collectively hold another 20%. Just 6% is with retail. Then third stock in the list is Phase 3, where ace investor Ashish Kacholia has consistently increased stake from 2.78% all the way to 5.42%. Phase 3 is a micro-cap company with market cap of around 1200 crore and primarily engaged in manufacturing and export of home textile products like your bath mats, rugs, blankets, throws, cushion, etc. Its key market is US and UK. Company's top line has grown at a very good rate since 2018. Although it has been stagnant in last 2 years, company's margins have also improved consistently but fell down in FY24. Its bottom line has also grown at fast rate since 2019, but earning fell down in FY24. Company's stock price has also been consolidating since almost an year. Fourth stock is also a micro-cap company. It's Port King India. Company has recently declared its Q1 result and its top line is up by 18% year on year and net profits have zoomed 75% year on year. Company is engaged in the production of yarn that include cotton yarn, synthetic yarn, blended yarn, as well as fabrics and garments. If you look at its shareholding pattern, promoter hold nearly 75% stake. Within retail, ace investor Mr. Anil Kumar Goyal has consistently increased stake in the company since last 4 quarters, and his wife Seema Goyal has also increased stake in the company. Company's stock price has consolidated for a long time and has recently seen a sharp recovery. By the way, Mr. Anil Goyal and his wife have also consistently increased stake in Nahar spinning mill that commands a market cap of around 1200 crore. Next 2 stocks are part of ace investor Mr. Mukul Agrawal portfolio. First is Lux Industry. Mr. Mukul Agrawal has recently entered in Lux Industry in June quarter. Now Lux share price has corrected significantly in last 2 years. But Mukul Agrawal entry in the company suggests that he is expecting better days ahead for the company. And second textile stock that Mukul Agrawal holds in his portfolio is Indocount, a leading home textile manufacturer of India. He has been holding this company since 2020. I have already discussed this company in detail in the past. Do watch that video to understand the business model and its potential. Then seventh stock that is part of ace investor portfolio is Rupa, and it's part of Mr. Sunil Singhania portfolio. He has been holding 4.2% stake in the company. Overall, the recent investment of top DIs, FIs and HNIs suggests that the textile sector is looking quite attractive and ready for next phase of upcycle. We have already discussed the reason for high growth potential in the sector that include improvement in demand, low inventory with retailers and fall in cotton prices. And then China Plus One and government focus are more of long-term growth drivers. Then we have also covered the entire value chain of textile space. Personally, I also hold a few textile stock in my portfolio that I discuss in my exclusive video series where I cover my own investment ideas and reason for investment. Although the idea behind the series is to only share my knowledge with long-term fundamental investors. For more detail, you can explore my website or check the join button on my YouTube channel. Now tell me in the comments, do you hold any textile stock in your portfolio? And let me know if you want me to cover any textile company in detail. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.